I see signs that we are or are about to be in a recession. Small cap stocks are lagging big cap stocks. Industrial distributor stocks are way down, and I think it was Fastenal or Granger talked about how there's a recession in the industrial markets now. You look at commodities across the board, they are crushed. Dr. Copper is down, iron ore is down. And I see that and I say, hey, are we in a recession? And then I say, so what? Right? Like, we're not here, I'm at least not here to be an economist. I'm not here to predict recessions. I'm not here to, win Economist of the Year award. I'm here to make money in stocks. So if we're in a recession, what does that mean? What do I do about it? I do what I always do, which is look at the numbers, try to look at the history, try to have some rational basis for action. On any given month, there's a 14% chance you're going to be in a recession. Intuitively, I feel like, well, recessions are bad for the stock market. And if I look at a stock chart, recessions are associated with mediocre times in the market. But when I try to put rules around that, when I try to actually get into it, it doesn't look so bad. Since 1950, the average recession from peak to trough has had an average return of -2%. That's not so bad. And 50% of the time the stock market was actually up if you owned it through the recession. Now, this time is different. So if you look at the recessions that began with a 15 or higher Shiller PE, the results are worse. The average return was -7% peak to trough, and the median return was -8.8%. And there, 2 out of the 3 recessions, 2/3 of the recessions, led to declining stock market values over that period. So that's worse, but what do I do with that? So I don't know that I'm in a recession, and if I am in one of these bad, expensive market recessions, I've still got a 2/3 chance of losing money, not 100%, not 80% plus, but 2/3, and my average loss is maybe 8%. That's going to be over 10-11 month period. I'm a value investor. I have a capacity to suffer. Can I suffer through 8% downdraft? First question with the recession is, if we're in a recession, does that mean I should sell my stocks? And I come up with no. The expected value on that isn't so terrible. Second question, if I see something that's a great business with a great management selling at a great price, do I hold off on buying it because I think I'm in a recession right now? No, of course not. If I see something great like that, I buy it. I don't care what's happening. Like, if it's raining or pouring, if ash is falling from the sky, if aliens are invading, I buy that stock. I buy the good stock at the good price with good management, all that stuff. I buy it. And here we've got Buffett as an example. Because if you look at the 1973 to 1974 bear market, which was a doozy, that bear market basically lasted the entirety of those 2 years. And the recession that was alongside it started in November of 1973. It ended in March of 1975. So it lagged the stock market, bear market. And what did Buffett do during that period? Well, he bought a lot of Washington Post. And he started buying Washington Post in February 1973. He bought even more in May. And then he bought even more, like in larger sizes, in September of 1973. So he made 3 increasingly large purchases at the beginning of the bear market before the recession even started. And that was a great investment for him. So what we take from that is, don't worry about the recession, buy a great business at a great price if you can find it. So we're not going to sell all our stocks, and we're not going to stop buying great businesses. So we should keep looking for those great businesses. So the third thing is, what the heck should I do? Let's say we're in a recession. What should I do about that? All I can come up with is model it into my earnings forecasts. So instead of a steady rise in earnings, I'm going to put in a decline for a year. Because again, the average recession is 10-11 months. It's not, 7 years of horror. Second thing, you want to conduct your affairs so that you can withstand shocks, because shocks happen. You want to not own companies that are too reliant on the financial markets, because the financial markets are fickle. And you want to be on the hunt for great businesses in case that you get a great opportunity to buy them. None of these are new things. So maybe we're in a recession. Recessions hurt. But what I come to out of all this is keep doing what you're doing. Keep being smart and stop worrying about the recession. So that's what I'm going to try to do. I encourage you to do it too. This is the last video of the year, so I hope that you have a great finish for the year. I hope that you have a happy new year, and I hope that you've had a lot to be grateful for this year. Bye guys. Thanks. If you do own story stocks with a lot of momentum and no earnings and that are reliant on debt or equity markets, that bell is ringing right now. Kinder Morgan's dividend cut, which said, hey, we're not going to rely on debt and equity markets anymore for funding. We're going to self-fund. That's the ringing of the bell. Other companies that don't have their earnings are going to face at least the same pressures, at least the same difficulties raising money outside. And those companies that don't have earnings are in serious trouble right now. So if you've been running through the dynamite factory with a lit match, it's time to go home and put your affairs in order.